Structure. So who can tell me what market structure is? This is going to be we are going to be communicating in this class soon. Just let me unmute everybody's mic. Is there a newbie here? Like you've never learned how to trade before, like you don't even know what market structure is? Is there anyone like that? Don't be shy, don't be scared. We are all here to learn. So let's talk. Is there anybody here that don't know what market structure is before? Anyone? Is there anyone? You guys should unmute your mic and talk now. You guys should unmute your mic and speak. Oh, we are going to have this class tomorrow. I don't want any dumb moments here.
I've been trading before.
Who was that? Jeff. Jeff, was that you?
Yeah, it was me.
Okay. A product of ABBA. Unmute your mic. Are you new here?
I'm not a newbie. I've been trading
you're
before.
not new. Stena, what about you? Stena, what about you? Banks, unmute your mic.
I am not a newbie, sir.
Okay. All right. So basically, we know what almost all of us we know what market structure is. So basically, market structure is before entering any trade, one of the first things every profitable trader must understand is market structure. Market structure is simply the movement pattern of price in the market. Market structure is, I would like to say that market structure is like the without, if you don't know market structure, basically that means you're just trading with cruise. That means you don't know if the market is bullish, you don't know if the market is bearish, you don't know if the market is ranging. Do you understand? So market structure is one of that's why I always, even though you've learned Forex before, I always love to start with market structure, basic market structure. All right, so I'm going to draw, since we already have an idea of what market structure, so I'm going to just draw something and then ask some questions so that I know if you guys really understand what's up. All right. So what structure is this? Anyone can answer.
It's a bullish structure.
Why is it a bullish structure?
Market is uptrend.
Why is it bullish? What happens in a bullish?
Because it's given higher highs and higher lows.
Okay, so that means only the highs gets taken out in a bullish structure. The lows don't get taken out. This is a low. Let me.
Okay.
Lower low. No. It's supposed to be higher low, higher high, higher low, higher high, higher low. So higher high, higher low, higher high, higher low, higher high, higher low. So basically, only the highs gets taken out in a bullish scenario, in a bullish structure. This is a high. This is another high. This is another high. So you can see only the highs gets taken out. The market price did not come back to do this. Price did not come down to take out this low. and close below it. If that happened, then that means it's no more a bullish scenario because in a bullish market, only the highs should be taken out. The lows should maintain. All right, so let me draw. So what's happening here?
It's the bearish market.
Bearish market. Okay, so it's vice versa. The same thing here. In the bearish market, only the lows gets taken out. Now, in synthetic indices, right? I used to, if you be watching my videos, you hear me say things like price does not leave other blocks unretested, right? So you're really going to be using this for synthetic indices. You might not really be using it for currency pairs. Do you understand? But what I'm about to tell you right now is it works for synthetic indices, which I'm still going to show it to you guys. So after this low has been created, you can see the price came here, broke through it, came back. There's something price is coming back to come and retest. There's always something price is coming back to come and retest to go back up. I'm going to show this to you in on the charts. There's always something. Maybe it might be another block. There's always another block. You see price will come down to another block to use the other block to buy up. Same thing. Price will come down to use the other block to buy up. Let me draw a new. You see something like this. Price will come down to the other block to buy up. Price will come down to the other block to buy up. Price will come down to the other block to buy up. So you see things like this happen in synthetic indices. That's why I'm able to send you a trade and then tell you that, oh, price is coming down to somewhere. Price is coming down to another block to use to buy up. Let's go to the, okay, we have one move. Well, what's happening here?
It's a ranging market.
Why is it a ranging market?
Because highs are not taken out and lows are not taken out.
Okay, so basically, price is respecting support and resistance. Basically, so I call support is like, let me explain what's happening here. So it's like you have a building, right? Like even the building that you are in right now, it's called support and resistance. It doesn't mean that price cannot break through it. Do you understand? So let's say the building that you are in right now, like your house right now, you have the floor and then you have your ceiling. Your support is the floor. Even if you throw a ball, it's going to bounce and come back up. Bounce and come back up. It's not going to break through it unless you use force, unless you use a shovel or something like that. That's when it's going to break through it. That's why I say it doesn't mean price cannot break through it, because at the end of the day, price cannot only just be moving like this. Price moves like this because buyers and sellers are on the same level. Why this is just buying is because buyers are more in the market. Why this is just selling is because sellers are more in the market. Why this happen? Why we have a ranging market is because buyers and sellers are in the market. Like let's say if there's a 50% of buyers in the market and there are 50% of sellers in the market. That's why we have. That's why it produces a ranging market. And then at some point, price will break through it and then retest and then keep going. So let's go to the charts. Which one should I use? So when you're trying to look for a trend, what time frame do you use? Do you think you should use? Anyone can answer that. When you're trying to look for like a direction of the market, what time frame do you use? It's just
Yeah,
a
I think
question. Anybody can answer. Even if you're wrong, you don't be scared to be wrong. Do you understand? Like it's a question. Just answer
I
it.
think the daily time frame. I don't know if you can hear me. Can you hear me?
Yeah, I can hear you. Yeah, I can hear
Yeah.
you. You
So I
said
think
daily time.
the daily time frame. Yeah.
Why do you say the daily time frame?
Okay. In synthetic, I think 24 hours is the highest you can go. That's for synthetic though. So that one actually shows the overall direction of the market because that's like the higher time frame. So it shows the overall direction of the market.
Yes, you're very correct. You people have an idea already. Somebody else. Let me check how many people are still here. Somebody else. Who was talking? Jeff, was that you?
No, it wasn't.
Who was talking? Who just spoke now?
It's me, billion. Oh God, billion trader.
Okay, billion trader. Okay, somebody else should speak. So billion said daily time frame. You guys have been trading, right? Like you said. So give me your own answer. I'll call names
I'll
though.
say the daily too.
Daily time frame. Why are you saying the daily time frame?
Because like you can see from the bigger picture from the daily.
Okay. All right. So you are actually the both of you guys are actually correct. Very correct. So let me take this out.
Oh, sorry, I have a question, bro.
Yeah, ask a question.
Okay, so now I said the daily time frame because most of the times I see when people say if you want to pick your daily buy, we want to pick your trend of the market, you should use 4 hours time frame. So I'm a bit confused about that. I don't know the one that is right and the one that is wrong. Yeah.
So the two people, yeah, you guys are both correct. You can use your 4 hours for your buyers. You can use your daily time frame for your buyers. But I'm going to tell you the more daily time frame tells you daily time frame is one candle. You know that's right. Daily time frame like this one the daily time frame is one candle. One candle forms one candle is a day on this. So I'm going to advise anybody to use daily time frame. Like if you want to know the direction of the market, you want to know your buyers, use your daily time frame. Do you understand? But some people, like I said, okay, let me even say this. The person that taught me this strategy, right? The most times do not even use daily time frame. So there were things I had to unlearn. There were things that when I was doing my own homework, when I was practicing and everything, I noticed that this stuff because the person does not even trade synthetic indices. So I'm like, this thing does not work for me. It does not work on in synthetic indices as it works on currency pairs. So I had to take it out. So, but for synthetic indices, I'm going to advise you. Everybody here should use your daily time frame for your buyers. Why is because it tells you the whole picture. It shows you the whole picture. It's you cannot use 4 hours. 4 hours is like 4 hours make daily time frame. One candle makes a day. Let me show you what I mean. This candle makes a day. This candle makes a day. One of this candle is one day. So why would you want to go to 4 hours when 4 hours does not really tell the whole picture? I would say you can use your day time frame for your buyers and then go to your 4 hour time frame for your entry time frame. Please mute your mic. When you're done talking, just mute your mic. So you can use your daily time frame. Please mute your mic. Mute your mic. Let me mute you. So as I was saying, you can use your daily time frame. Use your daily time frame to get your buyers, and then you use your 1 hour time frame. You can now go down to go and look for your entry time frame. Which me, I use my 1 hour as my entry time frame. But in your when you're studying, when you're trying to do your own homework, when you're trying to find out what works for you, basically, you might say, oh, 4 hours does not work for me. Even 1 hour say might not even work for you. You might say, oh, 30 minutes time frame is what works for me for my entry time frame. That's because you've studied and you've done homework and you've seen what works for you. Right now, I just want to give you guys the knowledge, basically. Like I want a situation that when this is all over, you guys can be able to trade on your own. You guys can use what I've taught you to be able to create your own edge, to be able to create something that's going to be working for you, basically. That does not mean if you still want to use my own strategy where I trade, it's not going to work. It's actually going to work. But at some point, you might say, oh, this does not work for me. Like me, I have, if you've been watching my videos, like let's say my videos like last month, you'll be hearing me say my confirmation was only an engulfing candle. But today, as I speak to you, it is not that. In fact, I don't even use that. I don't even think an engulfing candle, someone can use that as a confirmation anymore. That's growth. That's because I've seen a better confirmation, which I'm still going to show it to you guys. In fact, I did a video for that already. It's on YouTube already, but I'm still going to show it to you guys. All right. So have I answered your question? Have I answered your question? I don't know who was speaking.
Oh, okay. I was one that asked for time frame alignment, or I get alignment is called anyways. Yes, I was one. Yes.
All right. So I wanted to identify. I want you guys to identify a bullish. Let me hide most of these things. My chart is always very dirty because I'm always on the chart. I'm always working. All right, so you guys can see this is a bullish market. This is a bullish structure. It's very clear. This is a bullish structure. And we had this on our daily time frame. Right? This is a bearish structure. Let me bring this down. This is a bearish structure. Let me take all these things out. This is a bearish structure. This is a bullish structure. Now, I want somebody to help me name the higher high and the higher low. Starting from here. Can somebody do that? From this trend line, where I'm drawing this trend line, I want someone to identify the higher high, the higher low, the higher high, the higher lows. Can someone do that? Like I said, we are going to be interactive. This, you guys already know market structure, like you said. So let's interact. Oh, I'm going to call names. I'm going to call somebody to do it. I've not heard someone's name here. A product of Alba. I'll meet your mic. Can you unmute your mic? Unmute your mic.
I've done that.
All right. So can you identify the higher high and the higher low?
Sure.
All right. Can you draw my screen?
I don't think so.
Okay. This. Oh,
I
sorry.
can't.
This is not Zoom. This is not Zoom. All right. So just guide me. Right. So just guide me.
That's a high,
This is a high. Okay. Let me
low. That's a
hold
low,
on.
high. The first.
Hold on. So you say this is a high, right?
Yes, this is high. Then down is the low, higher low.
Okay.
Uh,
Higher low. All right. Keep going. Keep going. I need you to name till we get here. Where's
that
the next
place is
high?
another high.
Where?
Up.
Here.
Go up. Up a bit. No, up.
Wait. See where my
Higher.
arrow is. Is it
Yes, that
here?
place.
Is it here or here?
Oh,
Which of them?
down.
This one. This one.
Since this that high broke the previous one now. Yes. Since it broke the previous one now. So I can see clearly.
All right.
Yes,
So
that place.
all right. So this is the low bar. Higher low.
Yes.
Is this the higher low?
Yes, that's the low.
All right. Where's the next high? This one.
Yes.
Where's the low? This one.
This is the low. Yeah, that's the low.
All
I'm
right.
right
Where's
too.
No, I need you to be sure. After you, another person is going
Yes,
to do
yes,
it.
yes.
Then
That's
we
the
are going
low.
to
That's the
compare.
higher low. That's the low.
This is the low. All right.
Yes.
So where's the next high?
Yeah. That's the next high.
This is the next high.
Yes. Yes.
All right. Where's
Higher
the
high.
low? This one.
Yes, that's the low.
All right. Where's the next high? This one.
No, it didn't break the previous high.
Is this
That's like a weak. No,
okay? So where's the next high?
that's a body to weak break. So the next high is the following one.
There's this one.
No, the next one. Yes,
This one now.
cause this. Yes, that one.
All right. You're very, very correct. I wanted to catch you here, but you're very correct. This is because let me also mark them out. That's the first high. Like we say, in a bullish scenario, in a bullish structure, only the highs get taken out. This is another high. This is another high. I was thinking you would tell me that this is another high. That this particular one is another high. But this is not actually another. After this high was created, the next high is this one. Why is because it
Yes,
closed above the previous high.
yes,
Please pay attention to these little details because you're going to need them. Even for confirmation, you're going to need this. Where's the next high? This is your next high.
yes. High, higher high.
Where is the next high? This is your next high.
Yes, higher high.
Is this your next after this? Is this your next high?
No,
Where's the next
the
one?
one
This one.
up.
All right, you're very
Yeah, that's
correct.
the next high.
You are very correct. All right, let's have somebody else somebody else should for a bearish structure, somebody else should who's going to volunteer before I choose? Since I just spoke about people coming to talk, people have left the call already. Somebody else should volunteer for us. Somebody else. I'm going to pick. All right, Billion.
Oh, I was praying you don't pick me. Okay. So
Let's
the
do
honest
this.
truth is that I used to have issue at times with prices like this, unless I zoom it very high. But let me start. Now, where is your cursor is at?
Yeah.
Because from here now, this is lower high. Yes,
Okay.
lower high, lower low.
What's this one? No, hold on. This is lower high.
This is lower high. Then this one that looks like a wick coming down. No, the wick of it there, at that bottom is lower. The wick
one.
of before that one is the lower low. I think this wick here. No,
Okay, wait, hold on. Let me draw a line. Let me draw a line so that you. Is that the low?
Oh my days.
Just try. Don't worry. Just try. We are all here to learn.
Okay, no problem. So this one, that place you drew is low.
You're actually
lower,
correct. So
This is
you're
lower
actually
high.
correct.
Lower
This
high.
first one that you said, you're actually correct.
Lower high. Then
So
this one here is lower low. That place
this
you
is
drew is lower low.
it's
That's the
lower
lower
low.
low. Then
All
this
right,
another
you're
lower high
correct.
again.
So hold on. Now, let me give you a cheat. In fact, it's not even a cheat. It is what's up. It is the truth about this whole thing. So in a bullish scenario, only the highest gets taken out. Listen, only the highest get taken out. In a bearish scenario, in a bearish structure, only the lows gets taken out. All right. So use that and guide me. So yeah, this is a lower low, correct?
This is a lower low, yes.
All right. Where is the next high?
No, lower high and lower low, right? So this is lower high, this is lower low, lower high, lower low, lower high, lower. Okay, you're not pointing it. This one here, this top one is a lower
This
high,
one.
right? Yes, that's a lower high because then followed by the down part of it is a lower low. Because I think in a bearish, like you said, bearish market, only the what do you call it? The lows get taken
Only
out,
the
and
lows
the lower
get
low
taken
gets
out.
taken out.
All
Yes,
right.
so
So let me
the
draw.
lower lows are the down part of it.
So this is the low.
Yes.
All right. Where's your next low?
This is my next low. Where you are, down of it.
Right here.
Yes, this one. Yes. Oh my God.
I'm going to show you guys why this is very, very important. For a trade that I was supposed to take today, I'm going to show it that we were supposed to actually take on the group. I'm going to show it to you guys. So where's the next low?
All right. So this one, I think they are actually on the same level. This one, I think they're on the same level. Okay, yeah. So I can call this. That's the problem. This one is lower low. Where you are is a lower low.
You're correct. All right. So let me just name it. This is another low.
No, okay.
This is another one. So it is simple like that. Like it is. Don't think too much about it. Just use the same. In a bearish structure, only the lows gets taken out. In a bullish structure, the highs gets taken out. All right. So let me show you why this is important. What was that trade we're supposed to take today? I think it's V10S, Abi. There's a trade we were supposed to take today. The trade we're supposed to take today. Let me check on the group.
15-1, sir.
51S, okay. 15-1S, yeah, true. Where is 51S? Alright. Now, someone should show me what the confirmation should have been.
Okay. Before, right? I think
it doesn't have to be you. So there's someone that just spoke
no.
now
I
that
just,
said 51S.
I just want to say.
Okay.
Okay. I just
Go
want,
on.
to try.
Go
Okay.
on.
So before, right? You see this one that led to the this one led to market going down. What I call it, this lower high here. Yeah, this lower high here.
This one.
This part. Yeah, this part.
Is it
So
where
market
my
was
is?
yes. So price was supposed to break above. I think with an engulfing candle. I don't know if I'm right, but with an engulfing candle, supposed to break above that one. It's more like a break of structure. Like this, there's a break of structure down here.
Yes.
This part here, where that's so but
No
price was
worries.
supposed to break above it.
So
Not
are
short
you
term
saying
correction.
price was supposed to break
Yes, break above there with
above
a
here?
break of with an engulfing candle.
Yeah, you're very correct. But now it doesn't have to be an engulfing candle. If this candle, right, broke above, let's say if this green candle, you can see this green candle where my cursor is. If this candle broke above here, you have a confirmation. Why? In a bearish, we say that in a bearish scenario, only the highest gets taken out. When price has gotten to your POI, you wait for a break of structure. You just wait. You wait for price to break. This is a resistance level. So you wait for price to break the last resistance level. That's what I'm saying. Market structure is very important. It is still important. That's why I want everybody to be on this call, because I might not even do this. I might not teach this again. This is like it's market structure. Everybody's supposed to know this, right?
Sorry, I have a
So
question. Sorry.
yeah, that's the question.
Sorry for this. So now if price is breaking above this resistance zone, that there are wicks on top of it, right? Let's say price broke above it with a full body candle, right? Are we supposed to wait for that price to come back and test this resistance zone, or to just break above it with a full body candle, we can just enter? I'm always confused at that point because I don't know.
So
Do you get
let
what
me
I said at
understand.
all?
So are you saying if this green candle, right,
Yes,
break above and
broke
close
above this
above this level
resistance zone,
candle,
all you draw. Yes. Are we
if
supposed to enter the trade there, or we wait for it to come back again?
yes, you're supposed to enter the trade, because most times, right, most times price is going to come back to retest another block. Normally, there's always another block. Like I'm going to look for a trade to actually show you that also. Most times, there's always another block that price is going to come back to retest, and you will see that price is not going to break. Let's say this was the other block, this black candle. Let's say price broke here and closed above, right? And then it gave us this black candle was our other block. I hope you guys know what another block is. I hope I'm not rushing this whole thing, but I'm just trying to use this to explain why market structure is actually very important. So if you're lost, please just let me know so that I can get you back. So this is actually another block, right? So let's say this candle broke above this line and close. You are expecting one thing to happen. Either price keeps going up, or price will come to retest this other block. Now, when price is retesting this other block, price is not going to break the candle body. The candle that is coming back to retest this other block is not going to, the body is not going to break below this level. it's not supposed to break below this level. Because now you've had like a break of structure. Price has broken up. Price has told you, oh, I want to start buying now. And then there's an order block. And order block basically means money being stuck somewhere. So price has to come back to retest that order block and move. It happens plenty times in synthetic indices. It happens like a lot of times in synthetic indices. So have I answered the question?
Okay, let me just say it where you say very easy same thing. Where I will understand it. Now you said that if this candle, this green candle that rejects that resistance zone, if it had broken above it, right, to give us like a break of structure. This week will now be a break of structure to the body of that candle, right? So there are two things that will happen. Is either price keep on going, or price will either come back. So if price is coming back, it's coming back to this order block, this black candle before this impulsive move to the upside. So we're going to take our entry from that zone there.
Yes, you take your entry here, and then for your SL, now your SL, some people, right? If you don't really have a big account size, let's say you're not trying to lose. Let's say you have your $10 account, or okay, let's say you have your $50 account. You can risk $10 for this. You put your SL here. So, but the right place for you to put your SL is, let's say you bought from here. Your SL should be below this support level. Slightly be below here. Because if price should break, our for this trade here, this is your original SL. Let me show you your original SL. Your original SL is this low, right? Which price, even right now, price has not still broken to price has not still like hit SL yet. This is the original SL, and then you can imagine how much that would be if you actually take a trade from here. That's a lot of money if it actually does not go your way. So to tighten your stop loss a bit, you put it below this level. No more the original SL. But if you have a big account size, right, and if you're ready to take the risk, because mostly also price might just come down and form another structure and buy up, right? So it's either you use the normal, if you have a big account size and you're willing to risk to take the risk, right? You use the original SL. But if you don't, if you want to risk a little bit, like let's say you just want to lose like $10, like small money like that, you can actually just use the last support, which this is it. Price should not come here. You should have just used the order block and then bought. Just keep buying. All right. So do I answer the question? Have I answered the question?
Yes. Thank you so much.
All right. So you see why market structure is also important. It's also important. You don't only just use it to know the direction of the market. You can also use it for your confirmation also. All right. So do you guys understand what I've just said so far? If you have a question, you can ask now. If you have a question, you can actually ask a question right now.
Sorry, I think I have my wallet is too much. But sorry.
No, it's not too much. That's why you paid for mentorship. It's not too much.
Okay. So now, the question I want to ask is that is there a time frame? Let's say, for example, now we are picking from the daily time frame to check our buyers here.
Yeah.
That's what market is doing. So are we waiting for market to reach a zone on that daily time frame, then move to a particular time frame. You say if you use 1 hour for your entry, so is it that 1 hour we'll use and do the like more like confirmation, waiting for that candle to close, do everything, stop loss and the rest of them. I don't know if you understand what I'm saying.
I am trying to understand. So wait, are you asking me if your entry time frame is 1 hour time frame, right? Should that same
Yes.
1 hour time frame be your confirmation time frame?
Yes, like where you're entering your trade from, aside your daily time frame where you are seeing what market is doing.
Yes. So if you're using your daily time frame is just for you to, so your daily time frame basically is just for you to know if there's an order block. Your daily time frame is for your buyers, right? Even when you've had your buyers, let me show you. Let's go down. Let's go to the daily time frame. Okay, this is daily time frame. You can see we have this. This is the daily time frame. Like what I told you, price does not really leave other blocks unretested. You can see this green candle was an order block. Can you see it? This green
Yes, I
candle.
can.
So when you're also taking your trade, in fact, even when you go down to your 1 hour time frame and then you've had your entry time frame, right? You've had your structure. Always come back to your daily time frame to check what is happening around that price, around that level. Because let's say, like here now, right? Let's say price came all the way down, gave you a structure here. Price gave a structure here. Now, have you seen that price has left an order block unretested? This order block unretested. Price has left this order block unretested. For me, I'm not going to take this trade. Let's say if I had a setup here, or even though it might hold, right? But I'm not going to take the trade. In fact, it did not even hold because if you see price is not his TP. Let's say this was our TP. Let's say our entry was here on the 1 hour and then TP was here. The lowest point the market goes to. Price has not hit TP. Price came back and took you out. Right? So if you're using your day time frame should be just for your buyers. Just for your buyers. And then you go down to your 1 hour time frame. Now your 1 hour time frame, if you have your entry, if you see your structure on your 1 hour time frame, that same 1 hour time frame is supposed to be your confirmation time frame. You cannot go down to 30 minutes. I'm going to tell you when you can go down to 30 minutes or 15 minutes, but not today. Not today, right? I'm going to show you why when you can actually go down there. We need to build on the higher time frame first before even going down to the lower time frame. Lower time frame, any mistake you make, you're hitting SL because lower time frame does not really give you the full story of the market. It does not tell you the whole story of the market. Lower time frame is just this is like I said, one candle here makes a day. This is the daily time frame. One candle here makes a day. Inside this one candle that you're seeing, each of this one candle is a 5 minutes time frame. It's a 5 minutes candle. How many 5 minutes makes 1 hour? It is inside this candle, just one candle. Do you get? So when I say people go down to the lower time frame, you have to have practice a lot for you to be able to be going down for you to be trading 5 minutes time frame, 10 minutes time frame, 15 minutes time frame. But if you want to have less SL, like you want your trades to just be going very well, I will advise you use your higher time frame. After you found your buyers on your daily time frame, you come to 1 hour time frame for your entry. That same 1 hour time frame should be your confirmation time frame. Is that understood?
Yes.
All right. Do you have another question?
No. Maybe I shall go.
All right. Does any other person has a question? Madani, please unmute your mic. I've not heard you speak. Please unmute your mic. Madani. I don't know if I've pronounced your name well. Unmute your mic. We are still going to have another class again tomorrow in the morning, market structure, because this is just 1, 2, 3, 4, 5, 6, just 6 people. So we are still going to have another class again, still on market structure, tomorrow in the morning. Before I give my assignment, because I'm supposed to give you guys an assignment, but no, we are just 6 here. This is like me doing nothing. Out of 16 people, only 6 people here. We have 10 people left out. So far, do you guys understand what I've just taught you guys? Please unmute your mic and talk.
Yeah, I understand.
All right. So is it this question is going to be one by one. So Billion Trader, I'm going to start with you. So what is your challenge in trading? What do you find difficult? This session right now is you can open up to me, you can tell me your challenges like that you have in trading, so that as I'm teaching you, I know the path to actually touch individually.
Okay. So the thing is, I feel like most of the times when I go to the daily time frame, right, I see maybe market is going higher, and there's something I think I've learned or I've seen, whereby they say, even in your previous video, I think the last class you did, I was always available. That's why I didn't really understand, because I could not ask questions. You get?
Yeah.
That's why what I was interested in, so I could ask questions the way it's doing me, not like I'll just watch video, nobody to ask questions. So what I noticed is that in the video it said, okay, you look for the last order block, right? Maybe the recent order block on the higher time frame, and you, maybe like daily time frame. From there, you now narrow it down to like 1 hour. Do you get to now get your inducement and get everything? Sure, understand. But
Yeah.
so the issue I'm always having is that, let's say for example now, I go to like that daily time frame and I mark out my order block that has not been retested, the recent order block. So sometimes I used to have issue with the right one to mark out, because let's say for example the market has given us a very long candle with maybe in a sell scenario, right? The market has already given us a buy then with a long sell candle. I don't know if I should mark out that buy candle before the sell, or I will have to go above it. Sometimes I'm always confused about that. That's number one. Then number two is, if I start narrowing and before you know, before price will come to where I've marked, it might be like, in fact, it doesn't ever come back again. Price just keep on going. I've tried out for like 5 different synthetic pairs. It doesn't come back. So I'm always confused. That's why I don't really understand what happened. And this SBI, that's why I was interested. I want to understand how the SBI works, because I see that's what is. Yes, sir.
All right. So we are going to do that right now. So let's look for buyers. Let's look for buyers. We are going to look for buyers on 3 different pairs. Let's look for our buyers on 3 different pairs. So that means you have a bias problem, like you don't know which particular one.
Yes, sometimes there are some pairs that will just present itself. Like some pairs will just present itself. You know that, oh, this one is I. But some you just like this one. I was a bit confused because of the way it was. I don't know. Will I call it choppy then with a long?
Which which page were you analyzing? Let's do it. Which one? Which page do you want us to touch?
Okay, so in synthetic, I noticed that I have a feeling for VIX 10. I don't know. It's like I love that pair so much. That's like the pair that most of the times I can just enter my MT5 and I'll just look at it and I'll just say, oh, this is another block. And sometimes I go my way, like 40% of the time. Do you get? But most of the time when I use currency pairs like currency pair like Euro USD, sometimes I might just get it. But I have issue with gold and the rest of them at times, mostly synthetic, like 1 million times. Sometimes it just comes my way, sometimes it doesn't even come. So I don't know if you get what I'm saying.
Yeah, I get you. All right, so this is V10. This is V10, right? So let's find our buyers together. So where do you think is the buyers? Where do you think is the other block? Okay, like let's say you want to analyze, right? Where is the other
Yes.
block?
Okay, so
Which
if I'm taking,
will you use?
okay, so now what according to your last video I saw on YouTube, that's SBI. So if I'm going to judge by that, that's why I might be wrong though. So now if you look at where that your cursor is at, right? I can see that there's an order block there. This buy candle before this massive sell. Yes, that one now. But
Okay.
looking at it now, since on the daily time frame, price might not even go back there. That's just like my problem. Because I thought I led to break of structure to down. So if it's correct.
So rest and that you want to use your okay.
Thank you. So it can be
This one.
Yeah,
So another question. I've said this in my view. Now, what makes this setup valid?
Okay, are you asking me?
Yes.
Okay. So now, judging by this, I think
After you've had your after you've had your other block and your liquidity, what makes this setup valid?
I think we need
Because
to look for.
you having a sweep, because this is your sweep, this is your other block, this is your protected high, this is your inducement liquidity. You having this does not still make this structure valid. So what makes
Okay.
it valid?
A break of structure to the downside.
All right. So where is the break? A break of structure afterwards.
Now this is the break. This is down.
A break of structure
This break of
afterwards.
structure led to the downside. I don't.
Which of the break? This one.
This. No. This very big one here.
This one.
This one. No. This one.
This one.
From this massive drop. Yes. Where you are.
All right. You are very correct.
Oh my God.
Yeah. Don't be scared. We are learning.
Now look at this other one again. Now is it that your last video where I saw on YouTube, you made mention of you have to have two break of structure. Like you have to have, then one is one that's going to be like an inducement. That's the recent one is going to be an inducement. Then the previous one for that inducement is the one you're going to mark out. I don't know if I got that video.
Let me tell you the most important break. The break that once you've had that break of structure, you have a setup basically. After liquidity has been given, you see that break of structure. This break, because you're using here, which is still very correct. But let's use the support level. I don't know why this keeps coming up. You see this break of structure, price broke through this previous support level. This is like, I used to say, this is like your transport. Like if you want to step out of it. Let's say you want to travel to other states, right? You see that money that you're using to travel to another state, that money that's able to allow you pay for your transport, pay for your fare to go to another state, right? This is the same thing. If you don't have this second break of structure, this whole thing is rubbish. Your sweep, your order block, your liquidity is nonsense, basically. Because this is what price will do to you. Let's say you still use here. Let's say price did this. So price came all the way from here, gave you liquidity, did not give you a break of structure. Price is going to take you out and sell. Price is going to take you out and sell. But let's say price gave you a break of structure. Then you know that price is supposed to come here and sell down to the lowest point price goes to. So this second break of structure is very, very important. This is for those that used to use sell limits, buy limits, right? Like you don't wait for a confirmation. You will just be hitting SL, you just be hitting SL. Just because you do not have the second break of structure. Do you understand? Now, for your buyers, you said this is your sweep, your protected high, your order block. Now, this bias is correct. But I want you to check again. Where is the previous? Where is the previous where is the most recent order block? Start from here. Start from where price is currently at right now.
Okay.
So where is the most recent order? Huh? Okay, let me.
Okay, yeah, something like this again.
All right,
okay,
so
but judging by this.
No, continue.
Okay. So judging by this now, if I'm looking for the most recent order block, there are two places I can point out to. So I don't know, I might be right, I might not be right. This place we're using as an inducement can serve as another block, because after that buy candle, we have this massive bearish candle. Maybe I think they call it imbalance or something thereabout. That's number one. Then, okay.
So you're saying this, bar?
That's number one. Then number two again, I would have point one of all these ones that look like two brothers that are standing, like this resistance zone, but it's not very clear. It's not very visible to me, so I don't know if it's valid. Like,
no, sure, guide me. Where?
Okay. Yeah, so I can point, yes, another side, I can take that one.
This one?
Yes, that's that bullish candle before that bearish move.
This, right?
Yes.
So where is the liquidity for this one?
Okay, so if I'm picking liquidity for this one, okay, I can say this after that bearish candle, those two wick that look like those two doji candle, what they call them.
Yeah.
No, I won't pick that side. I'll pick this doji candle in this.
Yeah.
Yes, around that side. Yes.
All right.
I think that's where to make mistake. Then for this one, this other one.
For this one, yeah.
This place, this one is my liquidity. Yes, yes, that side you are. That candle, yeah. This, yes.
All right. So you are very correct. So what you're going to do for me now, right, is wait for price to come here. When price comes here, all this POI is very valid because they all have liquidity. Do you understand? If this did not have liquidity, If this POI did not have a liquidity,
Yes.
then this is not your buyers.
Okay.
If this POI, if this other block did not have liquidity, you can use it as your liquidity, you can use it as your liquidity. If this did not have if this other block did not have liquidity,
Okay.
this wouldn't have been your buyers. Same thing here.
Okay.
This other block, this is your liquidity, right?
Okay.
If this other block did not have this liquidity, it wouldn't have been a buyers. So you can see this,
Yes.
all of them all have liquidity. So and they also have second break of structure.
Okay.
If you're using here as your this thing, this is your second break of structure. If you're using here as the other block, you can use this as your break of structure. You can use here as your break of structure. If you're using this one, this is your break of structure. If you're using this as your POI, this is your break of structure. So all of them all have liquidity and they have second break of structure. So they are all valid. Now, what will make you start going out to your lower time frame to actually look out for setup is if this happens. Let's say when price breaks here, it's going to come back to retest. Price comes here. Now when price gets here, when price gets to your POI, are you listening?
Yes, I'm with you.
If price comes back to break below this low, this previous support level,
Okay.
you can start looking out for sales.
Okay. That means I have to wait for price to tap into this POI.
Yes, you have to wait for
above.
price to tap here. You might even wait. You might wait for those. You might wait. That's why you see people wait for 1 month.
Yeah.
So is that way that you're talking about? It's like you say something like price. Most time price does not come back to where you actually mark. I promise you, give you like a month or 2 months, price will come back there. It does not leave other blocks unretested. Synthetic indices, it does not leave other blocks unretested. So just give it.
So, but
That's why they say you must have patience. Patience, you must have it too. In this business,
Okay, so,
it is one of the great things you must have. Yeah, ask a question.
Now that we have 3 POIs now, so let's say you are the pro, right? Me, I might just be marking a random zone because you already know it. So let's say we have 3 POIs now. So which POI will you say we should wait for? Is it that we wait for the extreme POI or the middle one or this down one where you are currently?
I'm waiting for all the 3. The one that will give me a confirmation.
Okay.
Yes, basically, I'm waiting for all the 3. The one that will give me a confirmation. Because if this gives me a confirmation, price breaks below here, I'm just waiting for price to pull back. If a price is going to create, once price does this, comes tap into your POI and then breaks and give you a break of structure, breaks the previous support zone. Come to your 1 hour time frame and check what you have here. This you see another block here. Now, when you check, you see structure, you see SBI.
Okay.
On your 1 hour time frame. Then you also wait for confirmation. You don't just trade. Now, normally, if another thing that I'm going to tell you, if this is not going to hold, price is not going to give you a confirmation.
Okay.
If this POI is not going to hold, right? If this POI is not going to hold, price is not going to give this confirmation. Price might just do something like this. Price, like you said, in a bullish scenario, only the highest gets taken out, right? But what happened here? This low got taken out. Watch out.
Yes.
If this is not supposed to hold, right? Once price comes here, price is not going to take out this low. Price is not going to take out this low. This is what happened to our trade today. that we have been waiting for confirmation ever since. We have been waiting for confirmation. The price not take out that high. So if the trade is not going to, that's why we wait for confirmation. That's why synthetic indices, you must wait for confirmation. And I see people use buy limits, sell limits. Don't try it. Always wait for confirmation. If not, you'll be losing money. You might see a price will just come and use this one and start selling. So this is what's going to happen. If price does not give a confirmation, if price does not break this low, price will just come, retest an order block here because it's actually going to be an order block here, and then come down here, use here. Once price has broken this high, once price has broken above this high, this structure is no more valid.
Okay.
Do you understand? This structure is no more valid. Once price has broken above, let's say once price has broken a close candle body above here, this structure is no more valid. Same thing here. Once price has broken here, candle body, this setup is no more valid.
Okay.
Let's do another. How many? Should we let me see how many people are still here. All right. So let's do another pay. Which other pay do you like?
Okay, 25.
25. All right, 25. V25. So V25, I had this. Let me show you exactly. I like how what I'm saying, what I just finished saying, happened here because I had a bias here. This was my bias. No, you said I should use the. So, do you see why that was my bias? First of all, let's start from there. Do you see why this was my bias?
Oh, okay. Judging from what I can see, I think I have a break of structure to the upside, right? That's where you mark out that week up is a break to this body candle. I also have another break of.
No, first of all,
Okay.
can you see my order block? Can you see my liquidity?
Yes, I can see your other block.
Can you see my second break of structure?
And the second break of structure is this one that's the liquidity area.
Wait, okay,
That's
where
where
is
you
my
mark
second
at.
break of structure? Where is my second break of structure?
Okay, you know that normally in a bullish market, eyes are always taken out. But my
Yeah.
problem now is that yeah, I think it's correct. This place you mark, this your liquidity now, the top of it, those weak on top of it,
This one?
the top, up. Yes, either this one or this candle, there's a second break of structure
You are correct.
from that side. Yes, to the second break of structure.
This is my second break of structure. So what was I expecting them? What was I expecting price to do? To come here and give me a confirmation to buy, right?
Yes, but it failed.
Now, what did I tell you? See,
Wait for confirmation.
what is your confirmation? Okay, what is your confirmation?
Okay, so my confirmation was supposed to be this one that led to that break of this one led to this one that actually tapped into the zone we're supposed to buy from.
Yes. So
Those ones, yes.
okay,
They're going to wait for candles to
Wait,
close.
hold on.
Oh, sorry.
Price tap into your POI, right? What is your confirmation? What was price supposed to do?
Price was supposed to break above it.
Above which high? Guide me.
Price was supposed to price was supposed to give us a break of structure to the upside
Yes,
to
which
confirm
that's
that
what
we
I'm
want to
saying.
buy.
Which resistance level was price supposed to break? Because this is all these are resistance. This is a resistance level. This is a resistance
Okay,
level.
it's
This
supposed
is
to
a
break above
resistance.
this week.
So which
This
one?
week, yes,
This
where you
one.
are, no, yes, this one supposed to break above it.
Where my cursors are right now.
Yes, it's supposed to break above it, a full body candle. This one will now give us a break of structure to the upside. But I don't know if I'm
Yeah,
correct what I'm saying.
you are very correct.
Why is it that I'm getting now? If I now enter charts now, I'll now be a bit confused at some point.
No, don't worry. Next time you enter the chat, you'll actually be able to. It's because now we are doing it one on one. Like I'm showing, I'm
Yes.
taking you through the process, so you're
Not just
understanding
watching
it. It's
videos,
better
but
than
I'm
just
getting
watching
it
videos.
better.
This is why people need. This is why people get mentorship. It's different from just watching videos. Now, this was supposed to. Did you see that this did not break? It did not even. It tried.
Yes.
Some people, right? Some people might use here. You know that this is another resistance level. Some people might want to
Yes.
use here as a confirmation. You see this green candle, but no,
Mm.
this is the last
So
support level
why are we using that
before
one?
price goes
Why
to
are we
POI.
using this one?
Why we're using this one is because this is the last resistance level before price goes to POI.
Okay. I get now.
This support level, this resistance level, formed inside POI. If it formed after price had already gotten to POI.
Okay.
If it formed above somewhere here, let's say this candle did not touch this, did not retest this other block, it formed above here, it would have been valid. But price already retested it, and then the next candle is the one that formed it. No, you don't use that. You use the last resistance level, the last resistance level that was formed before price goes to POI. And as you can see, price did not break above it. So then you know that you don't have a trade. Simple like that. You know that. In fact, after that, after you've seen that this has happened, you keep selling the market. If you can say, I kept selling the markets. This is a trade that I had.
Okay.
I kept looking out for sales because I know that this POI is already gone. I know that this POI is not going to hold. Price has already broken below this level. It has broken below this support level. So do you understand how to find your buyers now?
I think I'll check the chart and do one or two. Then if I share with the group, then if there's any correction, just I would.
All right, no
And then
problem. All right, who is next? Banks, are you still with us? I know it's a
Yes,
bit
boss.
late, so people might have.
It's not really a question, but could you go on step 100?
Step 100. Step 100. Okay. All right, this step 100. What's the question?
Could you go to the 1 hour time frame?
Yeah.
All right. So on the 1 hour time frame, I see a bias, right? So there's a sweep, untested order block.
You see a bias.
Yes.
You cannot use 1 hour time frame. Okay, if you're using 1 hour time frame as your bias, what's your entry time frame?
1 hour same way.
Still 1 hour time frame.
Yes.
No, you cannot do that. You cannot do that. your entry time frame has to be different. Unless, let's say, if you're a swing trader, right? If you're a swing trader, you can use your daily time frame as your buyers and your entry time frame. But you cannot use this as your no, you cannot use this. So I'm going to advise you use your daily time frame for your buyers. Daily time frame. Use your daily time frame for your buyers. Because then you see things clearer. Do you understand?
I understand.
Yeah. So, but let's just go down. Let's go to the 1 hour time frame. Let me see what you were trying to say.
Okay, zoom
All
out.
right.
Yeah, right there. Go over to the left side. Right. Go back. Yeah, right there. That's the untested order block with where price sweep the high.
Okay.
Yes, and the inducement now would be the high to the right side of the lower
This
high to the
one.
right. Yeah. That would be the inducement.
Yeah. Where's the second break of structure?
The low. Hold on. Go to the left side. To the left.
Just
To the left.
guide me from here.
Down more to the left. Down more. Yeah, that one.
All right. You are correct. But now this can only and is actually it's actually obeying. Now let's go to our daily time frame and see what our bias is telling us. All right, let's go to our daily time frame. All right. So if I'm supposed to um take a trade, okay for you, not me, because this is not about me. Can you identify a bias the same way you identify this, right? Can you identify a bias like around? Let me zoom in. So identify bias, the same thing. From here all the way from here, check price from here down to where price is currently as right now.
All right, can you zoom out back a little?
Because we can see that price sold from here, right? Price sold from here for because of there's a reason price sold from here. I'm not going to I don't want to teach you guys this one now. I want you guys to be able to actually understand how you can identify another block using a candle before we start using wicks, because there's actually buyers here.
Yeah, that was the one that I saw.
All right. So, but I want you to do something for me, because I'm going to give you. I'm going to tell. Price might not get here. If this was like your I want to let you know why price might not get here. So, from here, I need from where price is at, from where my cost is at right now. I need to find buyers. Like just check around and look for a buy buyers.
Right. From the extreme low up.
Yes, from here, from this extreme low. Just be
All right.
checking,
That
be checking, be
that
checking.
that 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 candle at the low. The last sell candle.
This candle, right?
Yes.
All right. So let's mark it. All right.
Then
Where is your liquidity?
go to the right at the low. No, down.
This one.
No, back to the left. Yeah, that one.
All right.
And the second breaker structure would be the high.
This high.
No, the next one to the left. Yes.
All right. You're very correct. Now check again. This is correct, though. You're very correct. Like what you just did now, you're very correct. But check
Yeah,
again.
I'm just looking again. Hold on. All right, at the liquidity point, there is another untested order block.
Where is it? Can you like guide me?
At the inducement part.
Okay. All right. So this candle here.
Yes.
All right. All right. Your
And
liquidity.
the inducement partner would be the low that's closest to that one. And the second breaker structure would be the high. Yeah, that
Correct. So
one.
now, do you see why price might not sell down here?
Yes.
It's because you have POIs here that have liquidity and have second break of structure. So where would your PO where would your TP be? TP will be here. It does not mean price cannot
Go
come
to
down
those
here.
here.
Yeah. But let's say in a 100% chance, right? Price coming down here, it's let's say 50-60%. It might not happen because we have other POIs here. All right. So do you understand what we have just done now?
Yes, I understand.
I'm actually happy that you guys can actually point out your other blocks, your other block and your liquidity. That's actually very nice. It means you guys have been watching my videos. All right, so this is valid. This is very valid. Like you can mark it out on your you can mark it out on your chart so that you don't forget. This is
Yes.
valid, and you know what is going to make it valid, right? If when
The,
price gets here, you know what you're expecting when price gets to PY.
a breaker structure.
All right, very correct. So, is this all for you?
Yes, at the moment.
I have a question on this one. Sorry. Can I comment?
Okay. Ask.
Okay. So now you said that we can't put our TP at this extreme end here,
Yeah.
this extreme zone here. So I don't know. Is it because the market is trending higher? Like, is it because it's buying at the moment that we can't put it, or like I don't really understand. That's what I'm confused about.
It's because you have it's because you have POIs below it, right? So this is basically the way I've been able to when I send a setup, I'll send you a setup and give you TP.
Yes.
This is basically how I'm able to give you setup and then give you TP. I know where market is supposed to. I know where market is coming from. Right now, I can tell you that market is coming from here. Market is coming from this zone.
Okay.
And as we are coming, price, this is a free fall. This is free fall because there is nothing here.
Okay.
There is nothing here. We have this other block here. But this other block does not have a liquidity. That is, it does not really have a liquidity that we should actually say, oh yeah, this is a liquidity. I can't use it as my liquidity. I can't use it as my liquidity. Right?
Okay.
So where is your next POI? In fact, price is not even breakable. Okay, let's even say you want to use here as your let's say you want to use here as your liquidity. Price has not broken here. We are still waiting for confirmation. Do you understand?
Okay.
Let me draw it out. Let's say this is the other block. Okay, sorry. Let's say this is the other block. Price has gotten into it. Price has rejected it, yes. But now has price broken above this level? Not yet.
No.
Only what I can see is price tried and then it rejected. Like you see this mad rejection,
Yes.
right? This is a very crazy rejection. And what this candle might just do, might just come up here a little bit because this is also a reversal candle. This is a reversal candle.
Okay.
So price might just come up a little bit and then before morning, you know, it has started selling. Maybe let's say by 12 p.m. tomorrow, price is selling. Price will come break here and then come maybe use here. So basically, why I am not why my TP is here is because I have a POI below. In fact, my I'm just putting here because this is the last support zone. Normally, you can even put your TP here, or your TP can even be maybe above, slightly above your next POI. Do you understand?
Okay.
Yeah. All right. Next person. A product of ABBA.
Yes.
All right. So, ask me a question. What do you have issues with?
Actually, I'm new to SBI. I trade SLK, structure, liquidity, and key level. But I saw a write-up you posted on your group that SBI works best on synthetic. So that was why I wanted to learn SBI. So
SLK.
I'm new to yeah.
What's the L?
Structure,
What's
liquidity.
the structure?
What do you say?
What's the structure?
I cannot hear you.
Can you hear me?
Okay, I can hear you now. What do you say?
All right. So I'm asking. You said it's structure level, no structure, liquidity, and key level. All right. So
Yeah.
what is the structure that you look out for?
If the market is bullish or bearish.
Okay. When I say structure, it basically means SBI. SBI is a structure. Do you understand? Let me draw out what SBI looks like. This is what SBI looks like. This is structure. Basically, this is a structure that we all look out for. At the same time, this is SBI because this is a sweep, break, inducements liquidity, basically. So that's what I'm asking you. What's the structure that you look out for when you say SLK? What's the S? The structure. What's the structure?
Direction
Does it
of
look
the
like
market.
this? Oh, it's just the direction of the market. Okay, maybe I don't really understand that. All right, so for you, you might not be able to really ask me any question. just stay with us. Don't worry. But I might say you might have to leave SLK alone for now. Do you understand?
That's
Learn
what
because
I'm
I'm
trying to
teaching
do
you.
now.
Yes, you have to leave whatsoever you knew about SLK. I'm not saying that does not work. It works, right? I don't know SLK, but you know it. Now, what I'm going to teach you on SBI might be able to even make SLK more understanding for you. Do you understand?
Yes, I
So
understand.
so just follow us. Just follow us. You might not be able to really ask me any question now. But don't worry, with time you'll be disturbing me with questions for sure.
All right.
Who again do we have? Jeff.
Okay. Can you hear me?
Yeah, any question? Yeah. Any challenge?
Yeah. I have two questions.
Alright, ask away.
You mentioned reversal candle. What's the reversal candle? And when on the buyers on the daily time frame, must price tap must price tap into the POI before you start looking for entries?
Yes, price must tap into your POI and price must also give you a confirmation before you look for entries.
Okay.
It's a must
Okay.
because this is money being stacked somewhere. Oh. This is money being stacked somewhere. So if price came close, like let's say price came close here, I started going and you say, oh, price is going to leave me, oh, and you go and buy. Do you know that this is liquidity that price is supposed to come and take out? Price always comes back to take out any liquidity that is close to another block. So this question you're asking is very, very valid, sir. It is very valid. So let's say here, okay, I've seen something here. Let's say, let me take this out. Let me use this as an explanation. So you can see this other block. Now, price try coming. She see price tried to come into it, but can you see? Jeff, are you there? Jeff, are you there?
Yes.
All right. So I'm speaking to you, so I need you to respond to me. All right. So can you see price trying to come back? You have seen this other block. Can you see price trying to come back into it?
Yeah, but we not come back to it.
All right. All right. So
Yes.
imagine now price started going back up, and you say, "Oh, I'm going to lose this trade. This trade has left me behind, though." You now buy from here. I maybe put your SL somewhere, like you put your SL maybe somewhere around there. Did you see what price did? It actually came back to take out liquidity, this liquidity.
Yes.
So you must always wait for price to tap into your POI. If price does not tap into your POI, you don't have a trade.
Okay.
It's a must.
Yes.
And even after price has tapped into your POI, you have to wait for a confirmation. And what is the confirmation? I'm still using this. What's the confirmation? From all what I've taught, what's the confirmation?
Say break above the previous support or resistance level.
Okay, where is the previous resistance level? Since this is for a buy.
That that those two candles here.
Which one?
Yeah, that
Guide
one.
me. Guide me.
Up to the left. Yeah, that point.
All right.
Yeah, that's the confirmation.
And see what happened. Price went to TP. Straight TP. So this is something that I have. The person that taught me did not even teach me all this one. This is something that I had to learn on my own. I don't even know how I did it. I promise you, I don't know how I did this thing, but opening my laptop
Sorry,
every single day.
I
Yeah,
want to ask a question on this trade.
yeah. Ask a question.
You said to take this trade, you have to wait for a confirmation. Their
Yes.
price should be above that resistance level. But what comes to ask now is that
Yeah.
if I take a trade from that place, my SL will be too big. Let's assume I have an account of $10, and if I enter from there, my SL will be big. How do I reduce my risks?
Okay. So let me. There's something I said. There's something I said before. So let's use here your original SL is supposed to be here. This is your original SL.
Okay.
Let's say you enter from here.
Okay.
Your SL is here.
Okay.
Do you see? So you don't target this whole thing. You target the last load that was created, which is just this. You just target here.
But there are sometimes that some trade we have to do the drawdown up to the first that first entry. Some trade will go on a drawdown to that level. And if I've
Yes.
entered
Okay.
from there, my sell is up there. Sometimes, what if I'm taking out before the real movement?
Now, how do you another thing? How do you like if you let's say if you fund $10, if you fund a five let's say $50, how was your risks like?
What did you say?
If you fund a $50 account, if you fund $50 inside an account, how do you manage it? I don't know the word to use. How do you what's okay? How much do you put into a trade?
Maybe like $10 on a trade.
$10 on a trade, okay. Also, you must also know your pay, right? So step index, you cannot do that on step index. Do you understand? Step index is this small move. If you you can check it right now. This small move from here, you see how much is it? This is the daily time frame. Don't forget, this is the daily time frame. So we are not taking trade on the daily time frame. This is just buyers that we are doing. So it is when price has given you this confirmation that you now go down to your lower time frame. That's your 1 hour time frame. Now your 1 hour time frame, you can have that $10. You can have SL at $10. Do you understand? But if you want to check right now, this might even be $100, if not 200, if not even more, because this is your daily time frame.
Okay, the higher the time frame,
The
the
higher the
higher
time frame,
the
the higher the money you lose. The higher the money you also make. Do you understand?
yes.
But then there are other pays like V75. You can V75 this if you use 0.001, this whole thing on the daily time frame might not even be up to $20. It might not even be up to $15. That's why you need to study your pay. You need to know, like this person that said step index, he knows his pay. He knows how the pay moves before you actually mention it. The other person said VIX 10, right? So you have to pick your own pay first of all, and then know the risks around it. Know how volatile it is, so that you know how much you'll be able to be putting into a trade for others. If I'm to trade this, I trade nothing less than $30. I risk nothing less than $30, so that I know that it's a good risk. I can risk $30 for like $150 for like $200. Do you get?
Yes.
All right. So the owner of this question, the owner of this Jeff, Abi, is you.
Yeah, I'm going.
All right. So do you understand?
Yes, I understand. But I have another question.
Yeah. Ask.
What's reversal candles?
What's a reversal candle? I'll send the Bible stick candle. It's like a PDF.
Okay,
I'll send it to the group.
okay.
So
And
you study everything candle, reversal candle, doji candle, morning star, all of them, they're inside there.
okay,
So that once
okay.
you
So
see a
this,
reversal candle, you will know.
okay.
Like this, like
So we can,
like this now, hold on, like this right here. This is a reversal candle. This is a reversal candle.
okay,
So I'm going to send it. Once I send it, once you watch, once you read the whole thing, you will be able to identify different types of candles.
this one.
All right. So is that all for you?
Yeah, I have one again.
Yeah, ask.
This the SBI now is does it work on all the strategic space, both the step and boom and all the strategics? Because I noticed that you mainly trade volatility and jump.
So I trade, yes, volatility and jump. Use it on volatility and jump. It is very sweet,
Okay,
and it respects price action. It actually respects price. Like you would trade it and have peace of mind, not like currency pairs that you are trading. The US president will just wake up one morning and say something, and your hard
yes,
blood pressure is rising, and you're losing a lot of money on a trade, on an A plus trade. Because here, no matter what the man wants to say, it does not affect synthetic indices.
okay,
Because this does not have anything to do with what's happening in the world. These are like generated numbers. We are using generated numbers to make money. I posted, if you check the general group, I posted like a lot of things about synthetic indices. I'm going to repost it again so that you can also read. You can also do your research. You have chat GPT. Just enter it. Ask the thing any question in this voice to answer you.
okay.
All right. So the last person, I think, Madani. Please unmute your mic. All right. Let me allow you to. Madani can speak. Dominion, are you with us?
Yes,
Madani, oh yeah, okay, all right. Do you have any challenge? Any challenge? Dominion, are you with us? Are you with us? If you're with us, please. Do you have any challenge at all?
hello, sir.
I can hear you. I can hear you. I can hear you. Go on.
Thank you. So, okay, so now the only challenge I have, I want to understand this model SBI.
Okay, you don't know anything about it, right? You don't know anything about it.
Yes,
Can you hear me?
already
Can you
I
hear
know
me?
a lot about this one. So
All right.
the big
So what
challenge
I'm
of
going to,
mine is
all right, what I'm going
actually
to,
I'm dealing with psychology. Like, yes,
all right. So what I'm going to say is that since you don't know anything about SBI, I cannot actually answer your question. I need to take you through steps before you can actually understand it. All right. So it's good that you're in this call, you're in this program with us. Just give us time. Don't worry. You're going to understand this very well. Very soon you'll be asking us questions. All right. But for now, I cannot answer any question from you because you don't even know what SBI is. All right. Dominion.
okay, thank you.
Yes, sir. Good evening, everybody.
Yeah, good evening. Good morning.
Is it morning already? Or is morning already? Good morning, everybody.
All
Sorry,
right, your question.
I joined the class very late because network was actually disturbing me.
All right, no problem. What challenge do you have in with
Pardon?
SBI? Do you know what SBI is?
Yeah, I've been researching about it lately, sir. Yeah.
All right, have you tried analyzing? Have you tried analyzing? And when you were analyzing, did you have any issues?
Yeah, I tried analyzing, but I saw some trades. But I think I did some analysis of my own. But
All right.
why
So
I
do you
joined
have,
the
do you have any question to ask, or we should keep it for later? Do you have any question to ask?
for now, since we are just starting, no problem. I don't have any fun. I was having difficulties entering the market. That was why. And you dropped a video on YouTube, so I'm still learning from that one. So probably maybe during the class period, I'll get to my questions will be answered from your classes.
All right. No problem. No problem. No problem. All right. This
Yes, sir.
is all for today. Thank you guys for joining in. Tomorrow morning by eight, I'm still going to hold this same session, market structure, so that people that could not join in
Pardon?
will have the
You said?
opportunity to also. I said tomorrow by 8 a.m. I'm
Okay.
going to everything that I've done. Fam, I will do it better. You guys can. This night, I'm already the whole network thing already threw me off. So if you notice, I'm not really giving you guys in-depth stuff about market structure. But
Yeah.
tomorrow morning, I'm going to be good, and then I'll give you guys every single thing that you need to know, so that I can
All
give
right.
you guys an assignment.
All right, sir. But the
All
video will be
right.
posted.
So, yes, the video is recorded. I'll post it.
All right, then. Thank you.
All right. See you guys tomorrow morning.
You too.